What's going on, traders and creators? In today's video, we're going to cover exactly why 50 pips in the Forex markets can actually be more powerful than catching 100 pips. So in today's video, before we get any further, I want to make sure you guys subscribe to the YouTube channel and also follow the Instagram, so that way you guys can keep up to date with new videos and new content being produced every single day. So on to the video. So like I said before, we are basically going to be covering why 50 pips may be a better idea for you as a trader to look for than 100 pip moves. Now, there's a big misconception in the Forex markets that the more pips that you catch, the better of a trader you are, and simply that's just not true. I'm going to be producing a lot of videos in the coming days, basically talking about why that's not true and kind of proving my point. But in today's video, we're going to talk about exactly why 50 pips is probably a better target for you as a new trader to aim for rather than 100 pips. So as you can see, we're starting out on the Euro USD 1 hour time frame. And over the span of this, we're going to start from these purple blocks right here, and we're going to drag it all the way out. And if you can see, that's about 17-ish days. So let's say 2 to 3 weeks of trading, right? And what you can see with these pink or purple boxes is, I believe these are moves that I think new traders could have caught, whether it was on support and resistance trading, it was on indicator trading, smart money concepts, whatever type of trading you want. I just think these are moves that most retail traders would have been able to catch. And we're going to see how many of these moves were above or around 50 pips, and then how many moves were above 100 pips, and seeing if you could have caught any of these and made profits if you were to hold 50 pips or 100 pips. So let's go into this. So right here, we're going to use our price range. Basically, this is a tool that when you start from one point and drag it down or above to the next, it tells you how many pips was in that move. So let's say as a trader, you start off in this first block right here. Say you see the market come down, retrace, for whatever reason you decide to sell, right? Your stop loss is around here, maybe 20-30 pips, and you drag the market all the way down. The lowest possible point that the market came down was around 75 pips, right? So if you were trying to catch 100 pips on this move, you never would have, because it never came to this low point. But let's say you were going for an easy 50 pips, which is right here, boom, you would have gotten that trade, right? So that's 1 out of 1. And then as far as 100 pips, you never would have caught that move. Now let's come over here. Let's say for some reason you saw the market break out of the structure. You take your buy around here, say your stop loss is under here, maybe 30-40 pips, and you take it above, right? This time we do hit 100 pips because this was a really nice move. So we're going to give the 100 pips to this one for now. And we're going to take this away. So next move that we have is this one right here, right? Market was consolidating for whatever reason. Let's say you saw the bullish upcome and then the pullback, and for whatever reason you bought right here, right? You have your stop loss right around this area, 30-40 pips again. And again, you can see that the market only comes up around 75 pips, never reaches that 100 pip range. So if you were aiming for the target of 100 pips, you would have probably been, hit and break even, or you never would have profited from this trade. But let's say you're going for your 50 pips, boom, there you go. That's another trade that you could have bagged. Now let's move on to the next block, right? Let's say for some reason market comes up here, smart money, they take out all the stop losses and you decide to sell at this point. Market comes up and then it bangs down. Again, another 50 pips could have been bagged right here. But if you're a trader that's looking for more pips and isn't realizing the power of catching moves instead of trying to catch the most pips, you would not have profited from this trade. So if you're going for your 50 pips, there you go. That's another 50 pips. So we got a couple more examples that I want to show you. Let's just say right here, you took your buy, your sells down here, another 50 pips, but we never reached that 100 pips. I really hope that you guys are starting to see these examples that I'm giving you. It's starting to really show that, going for 100 pips is definitely a lot harder than you could imagine, right? But going for 50 pips is definitely more manageable. And I'm just going to take this last one as my example. Let's say we come here, right? We hit our 50, never reach 100. So right there, boom. All right. So now as we look at all these examples, let's say in the span of 2 to 3 weeks, we took 1, 2, 3, 4, 5, 6, 7 trades. That's not bad. That's about 2 to 3 trades per week. But as you can see, out of those 2 to 3, if you're a trader who is trying to aim for 100 pips, out of those 2 to 3 weeks, you would have only had one trade that would have hit your take profit. Now, as a trader, I don't know about you, but if I only get one profitable trade every 3 weeks, you better hope that you have a massive account, because if you're trying to live and survive off of trading, that's not going to help. But if we can see here, in a span of 7 trades in 3 weeks, you would have hit all of these targets, because all of them hit those 50 pip marks that we were looking for. And so I hope you guys are starting to see the power of why it's so important to look for those smaller, more manageable moves. 50 pips, 40 pips, 30 pips. It really doesn't matter if you're catching thousands and thousands of pips, because if you can't catch them on a consistent basis and you're hoping that maybe one day you can catch this move right here somehow, right? Sell all the way down. It does look glamorous to catch all of this, but how often does that happen? Because the last time the market moved that much, it never moved that much in the span of 17 days, 13 days. So really, you're waiting for the market to move like this for weeks and weeks and weeks. And maybe when you do see this, you don't see the sell-off. Maybe you see a market reversal for some reason and you don't catch it. So that's why I'm saying it's so much more important for especially new traders, but traders in general, to focus on getting consistent profits. Don't worry about getting those massive sexy moves. Worry about hitting those take profits more often. And that way you can start to see your account grow and compound over time. Remember, small baby steps will eventually lead to a massive success. Don't focus on the big, big, big profits. Focus on the little ones that compound onto each other. If you guys like this video, definitely subscribe to the YouTube channel. Make sure you follow the Instagram for more content. We'll be pushing out much more stuff. See you guys in the next one.